Okay, so today's lesson is on limited company accounts. So limited company is the next level of business setup after partnership. So when we started learning accounting, we learned the most basic setup of business, which is a sole trader. So a sole trader is a business owned by just one person. So that one person is called a proprietor or owner. So that one person gets all the profits to himself or herself and absorbs all the losses, right? That one person can withdraw any amount of drawings without asking anyone. Okay, so as the business progresses to the next level and the sole trader cannot handle all the business by himself or herself, then the sole trader might want to invite another person to contribute capital. So now they form a partnership, right? So basically, sole trader, there's only one owner. Partnership, minimum two owners. But for exam purposes, normally they'll give you two lah for partnership. But sole trader, we will know who the name of the partner is. Who the name of the owner is. Same with partnership because there's only two of them. But limited company, you have many owners. So when I say many, it can run up to hundreds, thousands, millions. So because the number is large, it's not possible or it's not necessary to know who the owners are. Okay. Well, of course, in real life, there is information. There will be a separate register book to know who the owners of the company is. But the bottom line here is, for an exam context, you don't need to know who the owners are because there are many of them. Okay. So before I go into anything further, let's compare and contrast the financial statements. Okay. So this is the sole trader's financial statement that you're looking at. So a sole trader, well, to start off the comparison, I'll go straight to the SOFP and compare just the equity section. Okay, so this is so I have to take a top-down approach when dealing with limited company. Okay, yeah, let's see. This is a sole trader. This is how the equity section looks like for a sole trader. And then we have partnership. This is the way we write it for a partnership. And then finally, we have the limited company. Let's put them side by side. Okay, right, it's just the wording. So on the extreme left, sole trader. Then in the middle is partnership. And followed by limited company. Okay, tell me what you all observe. What are the differences Can you all describe? If you can speak it out, it'd be better. Ian, what do you observe? What's the difference? We're looking at the same section. What's the difference? I just explain
the yellow color one got opening capital.
the way we write it is different, isn't it? Right? You have opening
Yeah.
capital, additional capital, and then profit loss drawings. Okay. And then Xuan Li, what? How would you describe? Any other difference? And then Shalin, I want to know your opinion first before I give you mine.
The first one, the sole trader is only one people's capital.
One person's capital. Okay.
Yeah, the second one is 2 or 3,
Minimum
and
2. Okay.
and the last one is a lot of people.
Okay. Shalin, you?
They have different colors, and then
Okay. All right.
the limited company one is a lot of people share. Basically, these are equities of different amount of people and different organizations.
Oh, yes. Okay, good. Okay. Thanks. Now, you all agree that the way they describe is different, right? Here is opening capital, additional capital, blah, blah, blah. Here is just capital by total, current account by total. Company, you see, suddenly you see different names, reserves and all that, right? They're all phrased differently, but in your opinion, is the idea different or the idea perfectly the same? What do you all think? When I say idea means, although they use different word, the yellow, the green, and the blue, do they represent equity or rather net assets? Yes or no? Ian. I just want a yes or a no. We use different words, isn't it? But are they all the same or not? As in, if you say they are the same, that means you are saying that the yellow, the green, and the blue is equal to total assets minus total. Oh, you answered me already. Same, right? Okay, thanks. So they are the same. They may be worded differently, but the idea is perfectly the same. So question is, why are they worded differently? Right? So in a sole trader, it's worded like this because there's only coming from one person, right? So that one person doesn't have to share profits with anyone else. So this is the one person's opening net assets. This is the additional capital contributed by the one person. This is the profit or loss for the year of the one person's business. This is how much that one person withdrew. Everything is about that one person. Okay. So, so all this total is equity. Although of course we use the word capital, but it actually means equity, which is total assets. That means I'm talking about this last figure here. This figure here is total assets minus total liability. So same goes for where's my color? Partnership. Partnership, these three total plus these three total, all the 6 totals is equity. Now the difference is if you compare sole trader, this is like mix, this opening capital is already mix of the original capital invested and the profits losses drawing from previous years. But this one here, which relates to this year, it's only original capital. This one is profit, this drawing. So for partnership, the capital invested, you can see in the capital account. So these are the figures we get when we balance up and close off the capital account. So other than the capital, the profits, the drawings and all that can be seen inside here. Of course, when I say can be seen, you cannot see it in the SFP. You have to go back to the current account. These are just the final balances. So nothing is left out. We have the original capital invested. we have the profits, we have the drawings all taken into account. It's just that for sole trader, you can see the drawings openly like that. Profit for the year, you can see openly. And then previous year's profits and drawing is already champo inside here. Okay. And previous year's profits and drawings is included in the opening balance in current account. Okay. Current year's profits and drawings is included in the current account also. So this total here is other than the capital invested. But when you total up together, it's equity. Yes. Now for company, wait, before that, do you all understand? I just did a comparison between sole trader and partnership. Understand, huh? Okay. So now for company, this is the capital invested. All this, well, you want to know where's the profit kept, but I'll explain in detail later. Profit is kept inside here. Okay. Any other gain and all that is here. Okay. So which means this is just the pure capital invested. This is the extras. So I repeat, for the extras in a sole trader is the profit and drawings. Same for partnership, but the extras in a company is we call these reserves. Okay. So for Charlene, I can't remember. IG, you all still learn preference share. Do you learn preference share, Charlene?
What share? Oh,
Preference
yeah,
share.
yeah, yeah.
No more.
Yeah.
It's no more in the syllabus for A levels. Okay. So SPM and IG, good news is you all can forget about preference share lah. Okay. We only deal with ordinary shares. All right. Okay. So now, since I've already did a comparison, I'm going to shut this. I'm going to shut this. Okay. So now let's talk about limited company. How did limited company begin? How did the idea come about? We need to go back a few hundred years, maybe 400, 500, 600 years ago. That's the time, I don't know, maybe you've studied history, what do you call? Industrialization started taking place. Machines were being invented, especially in the 16th century. 16th century, a lot of machines were being invented. Last time people did farm, for example, if we talk about agriculture, last time people used the traditional way. They plow the land using the animal, and then they started inventing machines. Industrialization started taking place. Modernization started taking place. Machines were invented. So when all this is invented, businesses also started to flourish. But the thing is, at that time, that time it's not like now. Now you got many millionaires, right? That time you got only either very poor people or very rich people. There's few rich people lah. Okay. So when you want to buy a machine at that time, it's very costly. Even more if you're in the business of maybe agriculture and you need to buy a machine, very costly. So you alone cannot, even as with a partner also cannot, or difficult to come up with the money. So then they came up with the idea, okay, why don't we create many owners? Okay, each of them contribute how much they can. So together, the volume of the people will make up of the entire capital needed to purchase whatever heavy machinery. And that's how limited company, the idea of a limited company started about. So the key takeaway here is many owners, each of them contributing whatever capital that they can afford. But because they got many of them, right? To add up all their portion, that's the entire capital. Okay. Okay, I just used the word portion, share. So imagine it's a slice of cake. Buy a cake. If you cut the cake and give everyone to eat, each person will have their share, right? So each person's portion of the entire capital is called their share. Hence the word share. So the share refers to each person's share of the capital. All right. So in modern day time, see, when you form a limited company, you are called a shareholder. If you provide capital, you are the owner, you are referred to as a shareholder. Okay, so the document to prove that you are a legal shareholder would be a share certificate. So the company will give you a share certificate. Okay. So I'm trying to keep the information as minimum for the moment as possible so as not to complicate. Okay. Now, why do people opt to be a shareholder in a company as compared to sole trader and partnership? There are certain things you enjoy in a limited company that you don't enjoy in a sole trader and partnership, and vice versa. So number one, in a sole trader and partnership, if you are sued, your liability is unlimited. Okay. But in a company, your liability is, each shareholder's liability is up to how much money they invested only. Cannot go beyond that. Okay. But on the other hand, for a sole trader and a partnership, you're allowed to withdraw. Sole trader can withdraw any amount. Partnership can, but you're discouraged. So the partnership will charge you interest on drawings. Limited company, shareholders cannot withdraw money. That's a reason. You see, and it's very logical. You see, you got many owners, many shareholders. If let's say you, three of us are one of the many shareholders, if any one of us withdraw, what about the money? What about the other people? The company will bankrupt, right? So that's why limited company shareholders are not entitled to withdraw money. So in a sole trader, the sole trader earns money from withdrawal, correct or not? In a partnership, according to the agreement, the partners earn by either they get interest on capital, they can withdraw. What else? They might get a salary, they might get a share of the profit, right? But for a company, can you all tell me what's the return of a shareholder? Must have some return, otherwise how do? Cannot withdraw money. So where are they getting the return from? As long as they hold the shares. What is the return called?
Dividend.
Dividend, yes. Dividend. It's just like you put money in the bank pays you interest after a certain period of time. So here, as long as the person is a shareholder, the person will receive dividend only when the company declares dividend, when the company agrees to pay. So I just told you all about two types of share, right? Which you all have learned. The preference share, which in SPM you used to call saham keutamaan. That type of shares, the dividend is fixed every year. But we're not learning that one yet. We're not learning that one anymore. It's removed. Okay. So the other kind of share is called ordinary share, saham biasa, right? In SPM. Ordinary shares, the company does not have to pay a fixed dividend every year. In fact, in certain years, the company can choose not to pay dividend. Okay. So now, how do we get around this then? So this is where I need to talk to you all a little bit about the stock market. I mean, all of you all are familiar or aware that of stock market, isn't it? What's the stock market in Malaysia called? You know what is stock market, right? The stock exchange. I'm asking question. Yes. No. If you're not sure,
Yeah,
then
but we are not that familiar with it.
okay. So this is one answer for all three. No, if you don't know, I can tell you. If you know, Bursa Malaysia, stock exchange. See, companies, there are two types of companies, two categories. One type of company is their shares cannot be bought by the public. That is private limited company. The other kind of company, their shares can be bought. If you want to become a shareholder, you can, if you are a public. So let's start off from there. Okay. Public limited company and private limited company. Okay, let's talk about private limited company first. So private limited company, the word private tells you it's private. Okay. These shares, you must be a director in the company, and these shares, they don't offer the shares to the public like you and me. So this kind of company in Malaysia, how do you identify them? The name followed by, I just type here, the company name is XXX followed by the word Sendirian Berhad. So when you see this, SDN is short for Sendirian, B is Berhad. This is private limited company. But if the company name is say XXX followed by the word Berhad, this is public limited company without the word SDN. These kind of companies are the companies which are listed in the stock exchange. Okay, stock exchange. So, okay, what happens in the stock exchange? Individuals, minimum 18 years of age, they buy shares. The game here is you buy at a certain price and you sell at a higher price to make a profit. Okay, that is like what you call a capital gain. For example, just give you an example. I can give you lots of examples because I'm one of the person who does it. Okay, this is a real company, MI Technovation. It's a tech company. It's called MI. So let's say the share price is now MI is going for about I think 267. I can't remember. Okay, let's say the Mr. A buys 2,000 units of MI shares. That means Mr. A buys 2,000 units of MI shares at a price of 267 per unit. Okay, so okay, tomorrow the share. So how much does Mr. A have to pay? 2,000 times 2.67, correct? Okay. Today lah. Then maybe 5 days later, let's say the share price, in the stock exchange, share prices will go up and come down, go up and come down. Okay. So 5 days later, the share price went up. Went up to how much? Let's say $3.15 per share. And Mr. A sells the share. Okay, can you all tell me what's his profit? Let's say he sold all his 2,000 units. Just calculate to your best and tell me. Okay, good. Okay, profit per share times 2,000 units lah. So the profit is 960, but he won't get exactly 960 lah because this buying and selling of share, he has to go to the bank. So the bank will deduct their commission. I don't know, maybe like 50 ringgit or what. So so you see, in this example that I'm giving you, Mr. A became an owner of MI, for a few days, for 5 days. Okay, he became owner because he bought shares, right? But he sold after 5 days. Okay, let's say the date that this happened was 16 June. Or is it 14 June? 5 days after 14 June is 19 June. Okay. So let's say in the future, we fast forward in the future in 31st May, MI made an announcement. to pay dividend. My question to you is, will Mr. A get the dividend or not? He bought 2,000 units, he sold 2,000 units, right? I should. Mr. A sold all his 2,000 units of share for. My question to you is, in May, will he get dividend or not? What do you think? Doesn't matter, just answer. I don't need to scared right or wrong.
Is he a shareholder?
Sorry. I got the dates wrong. Sorry. I wanted to say 30th September. 30th September. 30th September. By 19 June, he sold. No, right? Because he bought 2,000 units on 14 June. 19 June, he sold all his 2,000 units. So after 19 June, he's no longer a shareholder. What? Because company declaring dividend in September. Understand? But maybe if he sold partially, let's say he sold not all, maybe he sold 1,000 units, then he got remainder 1,000 units, right? Then he will get dividend on the remainder. As long as he's got some units, he will get dividend. Do you understand? So in this, if I change the example now, if he sold 1,000 units, each unit, the profit is 3.15 minus 2.67 times 1,000. So his profit is 480, right? Okay. He bought 2,000 units, he sold 1,000 units. So he got another 1,000 units. Then he will get dividend on the 1,000 units, the remainder. As long as he still has some units. Do you understand? Understand? Okay. It's like how you know. Let's say you have a house. You know, people buy property. People make money from property how, you know, two ways. One way is they buy the property and rent it out. So they'll get what? Rental income, isn't it? That's one way. Another way is they buy property and sell it within a certain period. Here, like the shares lah. Okay, so let's say you buy the property for, I put negative because it's a cash outflow. You buy at 300,000 and then you sell for maybe 367,000. Then you make a profit of 67,000. Okay, but after you sell already, can you rent it out? You cannot, because you don't own the property anymore. But if you buy a property for 300,000 and then you rent it out, you get rental income of 2,500. You will continue to get rental income and as long as the property is yours. Okay, so this option is the same as dividend. As long as you have the shares, company will pay you dividend if you qualify, if you have the shares. But when you buy and sell the shares already, you are no longer the owner of the property. You're no longer the owner of the shares. What you get is called a capital gain. This is called this is like a capital receipt lah. Understand? You remember we learned CERE? Yeah, this is a capital gain. Okay, right. So what is important is two types of company. Public limited company, they offer their shares to the public. They are listed in the stock exchange. Private limited companies, they are not listed on the stock exchange. Okay. Okay, what else we need to know is in a company, these few terminologies, but not all of them important lah. Just give you the important one. You have this called authorized share capital. Okay. You see, when people want to set up a company, they need to make it legal. They need to go and apply, to the government body, the Securities Commission. They need to do a name search. Just like when you're born. When you're born, your parents will apply for your birth certificate to prove your legal existence. Now, if you got no birth certificate, means you got no citizenship. Am I correct? So like that means your existence is not legal. So like that, to legalize, we need to apply. So when you apply, you need to fill up form. So there, one of the things they'll ask you is how much capital you want to put for the company. So this authorized capital is the maximum capital that shareholders can contribute. The idea of this is like credit card. Okay, when you have a credit card, let's say the spending limit is 100,000. Today you get a new credit card, the spending limit is 100,000. So it doesn't mean you spend 100,000, or it just tells you you're allowed to spend a maximum of 100,000. Like that. This is the maximum shares that can be issued. Okay, authorized share capital. So there is no double entry for authorized share capital. Okay, it's just information. So later when the company asks people to put in capital, the total capital cannot exceed authorized share capital. Now, what if the company wants to ask people to contribute more than the authorized capital amount? Can, but must ask permission to raise the limit. Okay. Okay, so there's no double entry for authorized share capital. It's just information. Okay, issued share capital. This is where issued share capital means that's the actual amount of capital that the shareholders have contributed. In SPM, you used to call it diterbitkan, issued. Okay, all right. So why they use the word issued? Because remember I told you just now, when shareholders put in money to get the capital, the company needs to issue them a share certificate. So that's why they call it issued capital. So when a company issues shares, that means the capital is increasing. People are putting money to become a shareholder. Okay. All right. So this issued capital, as I put here, can be equal or less than the authorized capital. Issued cannot be more than authorized. Issued can be equal to authorized or less than authorized. Okay. These two don't need to know lah. Maybe I'll probably take it off in the future. Okay, now let's talk about ordinary shares. So we only focus on one type of share, ordinary share. In SPM, saham biasa. So ordinary shares. If you are an ordinary shareholder, of course, you become a partial owner of the company, but you don't control the company. You are just you cannot control the company because your shares, your ownership is a small percentage. But you can voice out anything that you're not happy, which means you can vote. If you become a shareholder of a company, every year they will have a grand meeting. That meeting is called the annual general meeting. Okay, what happens in the annual general meeting is all the shareholders will come. Hey, next time when you all work, when you buy shares in the company, please go for all this meeting because you know why? Number one, you'll get better than the Starbucks I gave you. The goodie bag is very nice. They'll give you, I don't know, maybe your parents are shareholders, I'm sure, or someone are shareholders. Or you ask them if they've gone for this meeting, they give you very good souvenirs, very good goodie bags. You meet a lot of people. You can how to say improve your contacts and all that. And above all, the food is good. Okay. All right. So when you go for this annual general meeting, you can vote. Okay, what are you voting for? You are voting for whether to maintain the same team of directors or whether to change the team of directors or whatever you're not happy about lah. Okay. So ordinary shareholders, they can vote. Okay. All right. But ordinary shareholders, they don't get a fixed dividend every year. Just remember that. Okay. They don't get a fixed dividend every year. All right. So now I just mentioned about dividend. Let's talk about dividend. So in an exam question, the calculation of dividend, they can instruct you in two ways. Okay. One way is as a percentage, and the other way is as an amount per share, especially in the MCQ. Okay, let's look at how to calculate dividend as a percentage. Okay, here's a short example. So a limited company has got 100,000 shares of $1. Okay. Now, you will see this phrase all the time, shares of. Okay, this $1, it need not be $1, but normally they'll put the word of. This is called a nominal or par value. Nominal, oops. The older questions, they used to call it face value. Either one of these three words. Nominal, par, face. Okay, what is this nominal or par face value? Remember I said you need to apply when you want to form the company. So the original amount of share, 1 unit of share, you can choose whether you want it to be $1 or 50 cents or whatever. That is the original. Well, you can take this to be like for assets, like something like a historical cost concept, the original value. So, Charlene, I think you're familiar with the word nominal value, right?
No,
Par value?
no, I never heard of these.
But you have,
We never learn the calculation of dividends.
okay, but normally when they talk about shares, they will say maybe 50,000 shares of 50 cents of $1. That one got, right?
Oh, that one got, yeah.
That $1 or whatever is called the nominal value. Okay. SPM, both of you, have you all heard of nominal value? I know last time they used to teach nilai par, but I think they use the word par more, if I'm not mistaken. No, what? Okay, never mind. Not to worry. So this is the original value. Now, as time goes by, sometimes the company will, the share price will go up. So they will tell you issued at whatever price. So, okay, we'll come to that later. But just remember, this is the original value. Okay, it need not be $1. Just follow the question. Sometimes it's 50 cents, sometimes it's 60 cents or whatever. Okay, so now we want to calculate dividend. So dividend is declared at 6%. So how to calculate dividend? It's 6%. So here, a shareholder who buys 1,000 shares, you see here, this 100,000 is total shares contributed by all the shareholders. So from this 100,000, we are picking one particular shareholder who is 1,000 shares. We're not talking about the balance 99. 99,000 is somebody else. So this particular shareholder, if he bought 1,000 shares, he will receive dividend of number of shares that he bought times nominal value per share from here times 6%. Okay. So this one here, which I'm highlighting now, is the share capital value, which is number of units times nominal value per unit. Okay. So as a percentage of capital. Okay. Can you understand so far? Company is important, especially when you go to A2. Charlene.
Yes.
Good. Okay. So to this shareholder, company pays $60. But to total shareholders, it will be 100,000 times 1 times 6%, which will be how much? 6,000, right? Right? So which means the company pays $60 to this particular shareholder and the balance 5,940 to the other shareholder. So altogether $6,000 dividend. Okay. All right. Now, if the instruction is to calculate dividend as an amount per share, then the question needs to tell you how much is the dividend for each share. You just multiply by number of shares only. So here's an example. So a limited company has raised 200,000. That means they got money 200,000 by issuing ordinary shares of 50 cents. Now, Xuan Li, what is the nominal value of the share now? How much is each share? What's the nominal value per share? $0.50, huh? Yeah, 50 cents. Remember, I said it's not necessarily $1 out of 10. Okay, so now this means a little maths coming in here. So number of units, we don't know, but each unit is 50 cents. So number of units times 0.5 equal 200,000. So how many units were issued? 200,000 divide 50 cents, right? So that means the company gave out or issued 400,000 shares. That means people paid and they are owning altogether 400,000 shares. 400,000 times 50 cents equals to 200,000. Okay. So now if the dividend is declared or paid at 2 cents per share, there are 400,000 shares, right? So the company has to pay 2 cents for each. So the dividend will be number of shares times dividend per share. Any questions? This is important. Chat yes if you understood. No means I will explain. You take it slow lah, don't worry. Yes, yes. And okay, okay means this lah. All right. Okay. All right. So now this I've just talked about dividends. Okay. Normally dividends are paid at the end of the year. That means the company needs to know if the company wants to pay dividend, they need to see whether they got enough money to pay dividend or not. Correct or not? So what companies will do, they need to wait for the whole financial year to finish to calculate their full year, their final profit, and based on that only, they will decide whether to pay dividend or not. So normally the payment of dividend will fall into the next year because you need this year to, this whole accounting year to know this year's profit, right? So by the time you make a decision, it's already next year already. Okay. So usually dividends are paid based on year-end profit. But there are some times when companies do not wait till end of the year, they just give out like an early dividend. You know why? Sometimes, you know, especially the stock market is all about rumors, gossip. When I say rumors and gossip, it's like which company is doing well, which company not doing well. So if let's say the shareholders get a news that the company is not doing well, they will try to pull out their money, their investment, their capital. So this will be very damaging for the company. So to stop them, or rather to persuade them from pulling out their money, companies will not wait till the end of the year. They'll just pay them some dividend maybe during the year and tell them after end of the year got profit, I'll give you some more dividend. You know, at least give them a reward. Because you see, if you're a shareholder, your only return is dividend. If you come to know or rumors that a company is not doing well, you don't get a dividend. So what are you putting your money there for? That's how you'll think, isn't it? So to prevent you from doing so, companies will sometimes give out early dividend. This early dividend is what we call interim dividend. Interim means like early. They don't wait till end of the year. Okay. All right. Okay. So now let's stop talking about dividend. Let's go back to this one here. Let's talk about what are the financial statements prepared by limited company. Okay. Okay, let's do a comparison between sole trader and partnership and company. So firstly, company will prepare a statement of profit and loss just like how a sole trader does and partnership does. But this format here that you're looking at is in a compressed form. Okay. This format usually comes about more often in A2. In AS, you might or you might not. So you see here, everything is like very summarized, right? Let me call out the sole trader. See, sole trader, look at your statement of profit or loss. From gross profit here, how much information, your cost of sale is broken down, right? Opening inventory, purchase, blah, 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 blah. But for company, they just put one line in the cost of sales. Like no details. Actually, there's another separate schedule lah. So this one is more applicable for A2, but I just put it in AS level because sometimes they might ask you to prepare in this format. Okay, where they just want to see the totals only. Okay. Okay, for expenses, look at the sole trader. Other income and expenses. You got detail, right? You can see what's the name of the expense, what is the name of the other income. But here, all the expenses is broken down into three types: distribution costs, admin expense, finance costs. Okay, we all know about finance costs. But this too is a summary of all this. That means what I'm trying to say is, all that you see here is either categorized into either distribution costs or admin expense. Okay, how to know whether an expense is categorized into distribution costs? We go to note number 1. Distribution cost is all the costs connected with selling, getting the goods sold. For example, salesman, you want to get the goods sold, you need salesman to work for your company. Salesman salary is an example of distribution cost. Anything to do with the act of getting the goods sold. So you need salesman. Salesman salary, sales depreciation of salesman's motor vehicle. Salesman will be given company car. So when they go use the company vehicle to go and meet clients, the depreciation of the vehicle can put under distribution cost because they're going to meet clients in order to sell the goods. Correct or not? Admin expense is about what happens inside the office, the day-to-day running of the office, like the pantry, the accountant salary. These are people who don't go out to meet customers. Their work is they stay in the office. You understand? The managing director. But if he's sales director, sales department director, his salary will be under distribution because it's a sales department. Can you understand what I'm saying? So admin expense is like the running of the day-to-day office, all the expenses connected, what happens inside the organization. Distribution cost is all the expense incurred in selling, getting the goods sold, like carriage outwards. Can you understand now what I'm saying? So you don't really have to worry because if something is quite vague, the question will tell you, okay, classify this under admin or classify under distribution. Later on another class, I will show you an example. Okay. So this setup is called classifying by function because there are 3 functions here: distribution cost, admin expense, finance cost. But sometimes for AS, in a limited company question, the question will ask you to prepare the SOPL the normal way. That's called classifying by nature. Like what you do here. Nature means you can see the name of the expenses. Okay. So, right. So I put here alternatively, the SOPL can be classified. But 2016, they started this new format for AS. But after that, usually they ask you to prepare by nature. But the question will tell you, you don't need to worry. I'll tell you how to go about it. So now, a limited company will prepare an SOPL first. After that, they will prepare a statement of changes in equity. This one, I know Shalin, IG, they teach, right? But SPM, I'm not sure. What did they call it? Penyata kedudukan. Do you all learn this in SPM? I think they is lah. I can't remember the name. No. Okay, never mind. Now, this statement of changes in equity, it's a statement which tells you how the equity balance changed from the start to the end of the year. So what is equity? Equity, like what I showed you just now, equity is what I colored in blue. The share capital plus all these four are called reserves. Capital plus reserve is called equity. You see, I've also lined it up the same way. Ordinary share capital. Okay. So later in the next class, I'll teach you all what are all these individual reserves mean about. Okay. So we will take this. I'll see you all next week then, face to face for the next class. Any questions? Oh, wait. Attendance. Okay, any questions? No, they all understood today's lesson? Maybe not in full, but definitely more than half. Yes, no, more or less. Okay. All right. Bye-bye. I'll see you all next Monday, face to face. Okay. Thank you very much. Have a great weekend. See you all.